Welcome to this week's Video Insight. I have two charts to show you today which I think are pretty interesting. Now each chart corresponds to an equity fund and shows the sector exposures of the fund over time. That is, what percentage of the fund is invested in each industry over time. Okay, so let me show you the first chart of a typical index fund. So you can see a series of horizontal colourful lines. Now, each line corresponds to a different industry in which this fund invested. So, 16% of the fund is in info technology, 15% of the fund is in financials, 11% of the fund is in healthcare, etc. Now, many index funds look something like what I'm showing you on this chart. And the point is that index funds are typically exposed to the same industries in roughly the same proportions all of the time. The way we characterise that internally here is to say that index investors are investing in all of the places all of the time. Okay, now let me show you my second chart. So this is a chart of the sector exposures of the Montgomery Global Fund over the last 18 months or so. Now what do you see? Straight away the chart looks completely different to the first one that I showed you of the index fund. We have colourful lines going up and down at different times, and this is what true active management looks like in our view. You see, active management is not just about investing in the right places, it is about investing in the right places at the right times. For example, the red line jumps out clearly, and this represents the financial services sector. It's gone from low to high over the last 12 months. So what's going on? Well, over the last 12 months, global monetary policies have started to tighten, US corporate taxes have been cut, as is the regulatory burden on financial services businesses in the US. So it is perhaps not surprising that we have been finding more value in this sector of late. This is what active management is all about, investing in the right places at the right times. Contrast this with index investing, which is all about investing in all of the places, all of the time.